All right, we're live. We're live. Welcome, everybody. I pushed the record button, so for those of you that are watching the recording at a later date, I hope you enjoy the recording there. And of course, you live right now, per the recording here being recorded live. This is great to see so many of you along. Wow, I'm looking at the numbers there on the other screen there. A lot of people in attendance though, which is really excited. I've got a big smile on my face because I'm excited, I'm relieved, I'm happy to finally bring this to you. It's been something that I've been wanting to do for quite some time. I foresaw ETFs really taking off over the years, and here is the day where I've put together an awesome strategy for you to consider. Before we get going today, my name's Russell Markham. For those of you that are new, just in the chat box there, just put a yes, a Y there if you're new to VectorVest, brand new to VectorVest. Just always interesting to see how many new people we've got. And I also notice in the list there a lot of existing subscribers. So thank you for your support as always. My name's Russell Markham. I'm the Director of Education for VectorVest. I've been at VectorVest for over 13 years. I just have too much fun at VectorVest. I never want to leave. I never will. It's investing is my hobby, which has turned into my job as well. So I'm one of the lucky ones where my job is effectively my hobby, and I hope my enthusiasm rubs off on you. Okay. With that said, let's get going here. So I've got a disclaimer statement, our license numbers there. You can also see our webpage there for our financial services guide. In addition, please note general advice only today. I'm only licensed to give you general advice. Can't take into account your personal circumstances. Past performance, not a guarantee of future results. Forecasts and back tests that I'll show you today, they are discussed in this presentation. They're intended as a guide only, and those actual results may be affected by known or unknown risks and uncertainties, and therefore may differ materially from the results ultimately achieved. All right, with that out the way, let's get into it. So I'll set the scene, and then I'm going to talk about this wonderful course I've put together. And at the end, so I'll just be perfectly honest up front here. At the end, I'd love for you to come along to the course. It's not expensive. We've kept the price very, very competitive. The key thing behind this introductory webcast here is if I can't show you how to make money using the VectorVest system, then I've failed terribly. Then what was the point of the webcast? What was the point of the education and all the course slides and whatever else have you that we've put together? There'd be effectively no need for it. I'm just checking my chat box there. Yes, we're coming through loud and clear. Screen's still moving. Superb. So let's just set the theme as such. So an exchange-traded fund, an ETF, is a fund designed to track a particular group of shares, bonds, commodities, derivatives, products, or other assets. In essence, an ETF is a basket of securities that trades on the exchange, and in this case here, on the ASX. So, if I said to you, go and buy, shares that represent the S&P 500 in America, you'd have to go and open up an account that could allow you to buy shares on the US market, and trying to mimic the S&P 500 could be a very expensive and timely process, because how many of the 500 shares do you buy? And it'd be very timely and a bit of a nightmare to manage. So what if you could just do it by buying one ETF? That's all you have to worry about, one ETF that you would buy on the ASX. And that's what it's all about. And that's why they've become so popular. So I think I put a slide in here to remind me to bring up this web page. So what I'm going to do here is I'm going to get my web page open. Here it is. This is one hot off the press. Look at this, 10th of July. Today, Australian ETF assets soar through $200 billion as markets gains and investors inflow adds $25 billion over the first half. Australian ETFs assets under management surge around 15% of the first half. And what else? We read that one. This is compared with the total Australian ETF assets on the Australian Stock Exchange. Anyway, the article goes on to say they're becoming more and more popular. I guess the key theme here is the amount of money that is pouring into ETFs. That's the key thing I want you to take away there. I saw this just pop up just the other minute. I was like, oh, I should bring this into the webcast. I haven't fully been able to digest all the numbers there. But ETFs are becoming big in Australia, to cut a long story short. And that's what I wanted to tell you. And why is that? Why is it? Well, let's have a look. Here are the alternatives, right? I'll move myself out the way. So, do you go into managed funds? Do you go into ETFs? Do you buy stocks directly? Do you buy Australian stocks? Do you buy international stocks? What do you do as an investor? And this was interesting. This was by Beta Shares. Now, of course, Beta Shares do provide ETFs. So, bear that in mind. There will be, of course, the article written in a way that it's going to speak highly of ETFs, of course. But these are the facts nonetheless. So looking through this, ETFs provide diversification. Varies depending on the fund, but generally high, typically with exposure to an entire index. Managed funds varies depending on the fund. Okay, so call that one all. Expenses and fees. Brokerage costs, lower management fees, bid offer spreads versus buy-sell spreads, higher management fees, performance fees may also be charged. And in the course, we'll get into what all that means. But it's fair to say that under expenses and fees, ETFs would get the point. All right, so 1-0 to ETFs so far. Pricing, real-time, intraday. Managed funds varies from end of day to weekly or even monthly. Well, I'd prefer to get real-time or intraday. So 2 to ETFs. Points as such. Liquidity, generally high intraday. Varies significantly from high daily to limited liquidity in closed-end structures. Ooh, I'm tempted to give it a point, but I'll say it's even. But I'd say it's more, certainly liquidity is favors ETFs. Accessibility, buy or sell units like any share on the stock exchange, such as the Australian Stock Exchange, ASX. Usually need to apply through an advisor for the fund manager, high administration burden. Well, 3 points to ETFs, 3-0. Transparency of underlying portfolio. Portfolio constituents visible daily. Let's see, managed funds, rarely available daily, can be opaque. Well, you can see it. ETFs are becoming highly sought after for some of these reasons. Sure, there are some downsides, like anything in life, but the upside, certainly from what I'm seeing, outweighs the downside. All right, let's keep moving on. So, advantages of ETFs, some of the key advantages, that I took away: low costs, easy to buy and sell, know the exact value of your ETF each day. And another big one there, of course, is diversification if you hold sufficient amount of ETFs. So let's just turn to an example, all right? The semiconductor business, during the, COVID market sell down and all the issues with, COVID and the lockdown, semiconductor stocks became very hot property. Why? Because a lot of us wanted our gadgets while working from home, not being able to go out. So what did we turn to? We turned to upgrading TVs and stereo systems and other such gadgets. And guess what drove a lot of that? Yes, the semiconductors. A lot of us wanted new cars, for example. A lot of those new motor cars have a lot of semiconductor technology in them. So if you were looking at getting into buying some exposure to semiconductors, what would you do? Well, you could go out and you could acquire a couple of semiconductor stocks, or you could potentially consider an ETF that would track the semiconductor industry. So, for example, here in Australia, semi.ax, that's our ticker code in VectorVest. Semi is the one that you'd find on the ASX, and it's an ETF in the semiconductor business. And you can see here the graph over the last 3 months, it's been on a tear. It's gone from about $15 to about $18. Very nice returns. The overall industry has been under pressure, but the ETF manager has done a really good job with semi. All right, well, that's interesting, but tell us a bit more. Well, if you drill into semi, you could start to see what this ETF has offered on the ASX, what they offer. So this is some of their holdings. Now, this was just a snapshot just the other day. So it doesn't mean it's necessarily up to date as of today. It might have moved slightly, but the top 10 holdings, you can run your eye down here to see what the top 10 holdings consist of. And you'll see over here, Taiwan Semiconductor Manufacturing. That's a Taiwanese stock. So instead of you having to go to your broker and buy a Taiwanese stock, it's automatically done for you via the ETF, and you buy via the ASX. And if you look down here, you'll see there's another one, ASML.AS, and that is in Holland, I believe it is. Is that a Dutch stock there? ASML. Netherlands, I think it is, right? On the Netherlands exchange. So ASML. So straight away, you've got 9% plus another 9%. So nearly 20% of that ETF consists of holdings that are outside of the US. And then it looks like a lot of the other ones are held in the US. And you just simply buy SEMI on the ASX and it will give you exposure to all of that. Can you see the advantages now, as opposed to having to go and buy all of these individually and then manage them? It could get difficult, right? All right, moving on a bit. This is what really drove me to start applying my investment strategies to my self-managed super fund. So for those of you that are subscribers to VectorVest, you'll know I've often given you a snapshot. I use my self-managed super fund. I give snapshots of it. And one of the strategies I'm doing at the moment is an ETF strategy. It's done really, really well. And if you do take out a trial or do come to the course and get access to VectorVest, you can most welcome to come along to those weekly Q&As, and I'll give you some further insight into some of the stuff that I'm doing. And anyway, cut a long story short, about 2 or 3 years ago, I really started to see these ETFs starting to take off. And we keep in touch with, subscribers, and, one of our great long-term subscribers there. And if you're there, Bill, I hope you don't mind me mentioning your name, Dr. Bill Dodd, independent investor, a superb investor. Bill had been doing some work on ETF investing. So I had my father, Robert Markham, and I started to investigate into it. The more I investigated, the more blown away I became, so much so that I started to do a good portion of my self-managed super fund in ETFs. And then I got thinking, I thought, well, this is serving me well. Why don't I share this now with everybody else? After all, I'm an educator in VectorVest. I'm doing it myself. Now it's time to share it with others to see if they see what I see. Anyway, the rest is history. I now do a lot of ASX ETFs, and the results speak for themselves. I want to show you why. In recent times, right? So here's the AXJO. This tracks the ASX 200, or that's the index, should I say? The index of the AXJO, the ASX 200. And here IVV is an S&P 500 ETF tracker. All right, now, is it fair to compare an ETF to an index? Well, don't worry, we'll compare two ETFs side by side. But I'm doing this to make a point. Here's the ASX 200 since 2012. So this is a percentage return, and this is over the years. So I don't know, what's that, about 50, 60% returns? Not bad. Compare it to the S&P 500 ETF tracker. What's that, about 500% returns? Well over 400. There it is. It's like, well, okay, if this is what the US market's doing, why aren't we getting better exposure to it? And one of the reasons we haven't as investors, with VectorVest over the last 13 years, if I roll back even just 5 or 6 years ago, 5, 6, 7 years ago, I remember being at Q&As or on the road or presenting, noting to subscribers, the US market is doing incredibly well. You should get some exposure. Use VectorVest US to pick some good stocks. And understandably, a few of our subscribers said, well, I don't really want to do that. I don't feel comfortable. I'd rather buy stocks on the ASX. I don't know if my if my self-managed super fund will allow for that. A lot of those reasons were like, hang on, chances are if you check your self-managed super fund, check with them, but I'd be surprised if you couldn't acquire some US stocks, et cetera, et cetera. Now, again, I can't give you personal advice, but, we get sort of chatting, and then the real reason kind of came out. It's like, I just don't want to do it. I don't feel comfortable. I'd rather just have the ASX only and kind of get exposure to some of the US stocks via the ASX. And as time went on, a few of these ETFs started to emerge. We started to talk more and more about them, but there wasn't a lot of liquidity in the early days. This is going back 10 years ago. There wasn't a lot of liquidity, and as time has gone on, my goodness, the game has changed dramatically. So if you're not looking at ETFs, now is a really good time to be considering looking more closely at them. The game has changed. There is plenty of liquidity on them. So just to confirm there, IVV, there was the one in the graph before. So IVV, there it is. If I go back, IVV, it's an S&P 500 index fund. that seeks investment results that correspond generally, not saying it will track it perfectly, generally to the price and yield performance of the United States large cap stocks, okay? As represented by the Standard & Poor's S&P 500 index. Index measures performance of the large capitalization sector of the United States equity market. When you look at that, it's like, well, hang on, why haven't I got exposure to the US? I can't tell you that this will go on forever. Nobody knows. Nobody can give you that forecast. But what I do know is that, for example, at the moment, companies like NVIDIA, Facebook, Google, the Magnificent Seven, they've driven a lot of this. And why not consider getting some exposure when the time is right? All right. And then what I did there, just to compare apples with apples, is I compared the ASX 200 tracker. IOZ's a pretty big ETF. It's got a lot of liquidity. And I said, okay, well, let's compare apples with apples in terms of ETFs. IVV for the S&P 500 and IOZ for the ASX 200. You can still see, of course, because IOZ is pretty much going to do the ASX 200. But, a few of you might say, well, that's not fair to compare the index. How do you track the index? Well, you track the index using an ETF, for example, should you choose, as opposed to buying all 200 shares at a time. And you can see IOZ has pretty much represented the index as they've done their job well. They're doing that correctly. But, why track this index when you could track that index would be the question, or why not have a bit of both? And again, I can't advise you personally, but, you've got choices there. All right, so IOZ, iShares Core S&P ASX 200 ETF is an exchange-traded fund incorporated in Australia that seeks to track the performance of the ASX 200, investing in the 200 largest companies in Australia. So a big time saver, rather than you having to go and try, track the ASX 200 before ETFs came out. There would be fund managers in the past that would try mimic it, but not, of course, acquiring all 200. And the risk there is that if you don't have good exposure across at least 100 plus, you might not get the performance of the index. All right. But even then, if you had the time and patience to put at least 100 in, that would be a fairly onerous task and get quite expensive from a fee perspective. Think of all those commissions you'd have to pay on all those trades. So, you can just simply buy one ETF that does it for you. Hence the popularity. All right, now moving on. We then got to work. I got to work, and I was inspired by Dr. Bill Dodd, who had a look at my initial blueprints and gave me some wonderful feedback. My father, Robert Markham, helped me with that as well, because it was all very well in theory that the ETFs were providing some good results, but how could you consistently, develop the system such that on average it could do well year in and year out? And what if I had only $5,000 to invest versus $400,000 to invest? Would the system work as well, or would there be massive discrepancies and differences? And that was the initial building block. So I started thinking about this about 6 or 7 months ago. I remember over the Christmas break, I had a bit more time. I didn't have as many requirements of me. I remember sitting down, and part of my New Year's resolution was to formulate an ETF strategy that was easy to do. And at that point, I was just thinking about myself. I'm sorry, I'll just be honest. It was me and my investing. I thought, how could I make this better? And then as I started to get more and more confidence with the back testing and the design of it, all of a sudden, I then said, hang on, if this is good enough for me, this should be good enough for our subscribers. And why not then also showcase this to non-subscribers? Because I wish someone had come to me 10 years ago with a system like this and said, here's an ETF system. I remember back in the day trying to mimic the ASX 200 or the S&P 500, or trying to get exposure out on the US market or the European market. And it was expensive. It was daunting. It was a lot of work compared to what the ETFs can do. So anyway, I hope this will be of interest to you now, because this is what I do. All right, so ASX Global Superstar ETFs, when designing it for myself, it had to have low drawdowns on average. In other words, not too much volatility. What's the most that trading system, that ETF system, investing system lost from a peak to trough cycle. The returns had to be solid. I'm not after get-rich-quick schemes, right? Generally, they don't work and they tend to sort of blow up in the long run, right? So if I showed you a trading system that did, I don't know, let's say 80% returns a year, are you going to believe it? Are you going to believe that it's going to keep going at 80% indefinitely? What if I were to show you between 15 to 20% that has consistently been done over the last 10, 12 plus years? All right, so, like I said, not get rich quick, but just good, solid, steady returns. Most retiree investors with VectorVest note to me, show me just an easy system that gets me anywhere between 10 to 12% returns a year, Russell. I'd be happy with that. Nobody can guarantee, nobody can say, this will work every year. But what I do know is on the more and more back testing I've done, that on average, if I run the system back testing for at least 3 to 5 years, you'll see I'm getting well over 15% on average. Can't say that that will be the case every year. Nobody can give you a guarantee. We don't manage your money. We're not fund managers. We're not brokers. We give you the tools so you can look and make your own decisions. But that's what the back testing has noted. All right. So just just my disclaimer statement there. I'm not giving you any personal advice. Nobody can guarantee you anything, but have a look at the results and see what you think. It's got to be easy to follow. Less than 3 trades a year on average. My goodness. Could you imagine that? Could you imagine, having 2 scenarios? Scenario 1, 10 years ago, approaching yourself to say, look, I want you to get exposure to the US market, the European market. I want to get some exposure to Japan, the Japanese market, et cetera, and I want you to do it all with less than 3 trades a year. It's not going to happen, right? It's going to be impossible to do. And if I said to you, I want you to do all that, and I don't want you to hold any more than 5 ETFs, you might say to me, what is an ETF? Or then I say, oh, hang on, I have no more than 5 stocks. And, well, it's impossible. You couldn't do it. The good news is you can do it today. I can get you exposure to well over 500 plus stocks, probably up to 800-900 stocks in some of the ETF systems we've put together with 5 ETFs. 5 ETFs gives you like 800 plus stocks in exposure. Phenomenal. All right. And those 5 ETFs, on average, you do less than 3 trades a year. So if you're after an investing system that does a whole lot of work and each week you're having to do a whole lot of trades, then this is not for you. You'll be bored out of your mind. This is designed to be as simple as possible, because I think that's what the majority of our subscribers and potential new subscribers to VectorVest want. We just want an easy system. We don't want all the whiz and the bang and have to do 50 trades a week type thing. Most people run away screaming. All right, so got to be easy. It's got to be scalable. I've got to be able to start from, let's say, $2,000 if I choose to invest, right through to $350,000, and it's got to work. It can't be this magical rule to say, well, sorry, sir, or ma'am, sorry, this will only work if you've got $100,000 more to invest. Well, hang on, you should have told me that up front. That's not going to work for me. All right, so just full disclosure here, I've tested it from 2,000 to 350,000. And the last one here, it's got to be fun. And for me, fun is only if it's making money. If I'm not making money, I'm not having fun. I'm miserable. I'm frustrated. There's better uses of my capital elsewhere. So, when I say fun, it's got a return. Who likes opening up a trading system or portfolio each week going, I made some money again. Great. How many of us like opening up a trading system going, that's lousy. Yet again, another awful week. Maybe I should look to settle it all out. I don't know what to do type thing, right? It's got to be fun. So here's some proof in the pudding. Here's one of the back tests we did. I started this with a humble 2,000 and I went all the way back to 2012. I wanted to run it through COVID. I wanted to run it through all the different market conditions. A lot of ETFs came to be around about 210 to 212. That's why a lot of the trading system design and testing, we've gone back since 2012, because around about then, that's when a lot more of the ETFs were coming on board. If I go back prior to that, there's not a lot of ETFs. And if they were around, the liquidity was so low on them, they were very new. They were very sort of very thinly traded. So from around about 2012 onwards, it got going. The ETF market in Australia, since then, it's really taken off. Okay. So this one here, ASX Superstar ETFs. This was starting with $2,000. So from 212 went all the way up till now, 2024, it's turned the two into 7,000. Doesn't sound impressive. It's only $5,000, yes, but it's the returns there. So it's annualized 20% returns. It's done a total of 7 purchases of ETFs at $10 a pop, call it $10 a pop. 7 purchases. Like, so you did 7 trades since 2012. All right, so less than 1 a year, you know, type thing. Compounding at 10% returns. Max drawdown, 23%. This was during the COVID sell-off. It took a bit of a correction, and then boof, up it went again. This is what I'm after. I'm after easy, low amount of work, good, solid returns. You know, this is not get rich quick, but this is solid. No one's going to complain with 20% returns. 80, that's a year on average, right? Averaging annualized or compounding at about 10%. 83% of the ETFs were winners. And that's what we want. It provides low stress. You know, if I'm getting like, you know, only 8% of my ETFs were winning ETFs, well, then that'd be stressful, right? So low stress, because majority of the ETFs picked up make money in this back testing we've done. Now, a few of you might be saying, well, you know, I mean, that's not much to write home about. $2,000 growing to 7, you know, that's not going to pay the bills. Okay, well, let's do this. Where was my other one now? This one here, the second version, I started it back in 2012 at 150,000. Now look at this; it's basically identical. It's, you know, it's annualized 22%. That did 20. The one before, this one's done 22, so it's scalable. So that 150 grew to, what's it now, 564,000. Okay, so you've gone from 150 to 550. So you made about $400,000 on the 150. Now, all good in hindsight and in theory, but you know, it's got to then deliver going forward. But yeah, that pays bills. I mean, that's, you know, $400,000 in profit over that time. But again, it's scalable. It's holding up. Slightly more trades, 14 trades since 2012. You know, 14 trades over what, 12, 13 years. You know, it's basically one trade a year. Call it 1.5 to 2 trades a year. Again, look at that. 83% were winners. You know, that's what I'm after. Compounding at 11%. The drawdown during COVID, a bit of a drawdown again at 20, but I can live with that. Good, consistent, steady growth. You know, not a lot of work. Good percentage of winners. Heaps of diversification. Now, again, if you come to the course, I'll break it all out in terms of what this holds, but across this one right now, if you were in this system, you'd have exposure to about over 600 plus stocks equivalent via 5 ETFs, believe it or not. That's what I'm talking about. As opposed to, you know, 10, 12 years ago, to get this type of exposure, I'd probably have to go out and buy like 200 plus stocks, you know, maybe even more. It would just be a logistical nightmare to do. I don't think I know any investor, apart from fund managers, that would hold 200 or 300 stocks. I don't think I've ever met someone who holds that many. I have met 1 or 2 subscribers on road shows where they showed me that holdings was amazing, but it was no more than about 100, 120. I've never met someone that did 500, 600, 700 plus. And if I did meet that person, chances are they wouldn't have much time to talk to me because they'd be too busy trying to manage all those positions. If I've got 5 ETFs that all I'm doing is managing 5, so much easier, isn't it? Just have to do 1 or 2 trades a year on average. All right, much, much easier. All right, so now I'm going to show you the modules. This is module 1 because we actually covered this actually in fairness in module 2. But I just wanted to show you some of the back testing that we've done. All right, so we use this timing system called the DW, and at the course we'll get more into it for those that are new to VectorVest, and if you come along. But you know, if I started from 2012 and I took $100,000, right, it's annualized 21. You can see. But if I started in 2013, 23, 2014, 21, you can see it's pretty much been consistent. This is running all the way through until current date, equivalent. But you can see it's been pretty much consistent across the years. 2020, 2023. Then we hit a bit of turbulence. In 2020, it dropped down to 13. Then we had COVID sell down, and it went to 8, and then 2, and it's roaring back with a vengeance again, making up for lost time. So it looks to me like it's averaging around about that 20%. All right. Now, who would have really wanted to jump into the market at the height of COVID? I think a lot of investors were on the sidelines waiting for what was going to happen. And when the storm blew over at the end, towards the end of 22, coming into 23, away we went again. All right. You can see the percentage of winners, even during, the tough times with COVID, 50% and 31. So that's where it dipped. I wouldn't have been happy with the 31, but look, it's come back with a vengeance again. So the average across the board here, you'd see, would be around about 70 to 80%. All right. You can see the drawdowns over here as well. All right. Amazing. Like if you'd started this back in 2024, start of this year, all right, and you got going with $100,000 on the system, it's done a whopping 39%. It's had 89%, 83% winners, and the drawdowns only been 9%. The reason why you get these drawdowns that kick into the 20% range is because of COVID. Take COVID out, and most of them would fall back down to single digit. So the maximum drawdown is the most a trading system lost from peak to trough or a portfolio. All right, so I'll just give you the agenda here on what we're covering across the course here for the 2 modules. So it's only 2-module course. The idea being behind the course, I didn't want to make this a highly academic training type course. I wanted this to be as practical as possible. The key emphasis on this course is to give you a ETF system that you can take away and seriously consider for yourself, and then to be able to tailor it to your exact needs. And I'll cover a bit more about that shortly. So in module 1, we talk about what an ETF is. We talk about Australian ETFs, US ETFs, contra ETFs. So those are ETFs that are designed to do contrary to the market. So the market goes down, they're designed to go up. They don't always go up, but they typically do. If the market goes up, they go down. So they're good to consider in a falling market. We talk about leveraged ETFs, diversification, via ETFs, why invest in ETFs, performance, US versus Australia. Gave you a bit of a snapshot into that now. International exposure via ASX listed ETFs. These recordings are like literally 8 or 9 minutes each. They're not long. Choose your own broker. We talk about who offers ETFs and the competitive pricing out there. Why develop an ETF trading plan? We can compare, and I gave you a bit of a snapshot today on the managed funds, listed investment companies versus ETFs. We talk about trend analysis, short-term relative timing, our short-term momentum, and our longer-term momentum indicator, that being the comfort index, and how we use those to find good ETFs. And then we talk about market timing and risk management as well. All right, so that's module 1. And then module 2. So that was all the basic foundations, and then we get in and we start using the power of VectorVest to develop this trading system. And this is the key thing I want you to walk away with in the course. It's, okay, that's great, thanks for the theory, but now how do I make money? What could I seriously consider doing using VectorVest? And that's where this comes in. This is a practical, hands-on course. I have failed you if this trading system I've developed cannot pay back basically your VectorVest subscription and the cost of the course in 6 months, then to me that I've failed terribly. In fact, it should be a lot quicker. All right. So that's the aim. It's like I want to be able to get you to pay back as quickly as possible and then profit. And that's the aim. All right. And that's why I've shown you some of those back testings to prove, over 2, 3, 4 year period, those returns. That's the aim. So module 2, the ASX Global Super ETF watch list. So in the course that we teach, we have refined a watch list of ETFs. There's over 300 plus ETFs in Australia. We've only refined it down to a handful that we are very comfortable with. Not only for the course, but going forward. So, as part of the course, you get access to those. And if you remain on as a subscriber, then that list gets updated. It's one of my key things I do. I update that list frequently, and you'll find a lot of it won't move much, but from time to time there will be some movement. Then we talk about the ASX Global Superstar ETFs uni search. So we build a very specific and powerful search to draw upon a refined list. Then we talk about the ASX Global Superstar ETFs trading plan. So we put the trading plan together: when to buy, what to buy, when to sell. How are you going to do it? It's all very well saying, let's go and buy ETFs. All right. When are you going to buy them? What ETFs are you going to buy? And once you hold them, when are you going to sell them? At what point do you take the profit or recognize a loss? Once you've sold out to either profit or take a loss, when do you go back in again? Can you see where a lot of investors get themselves into trouble? They have this grand idea of going in, okay, I went to this webcast and this guy mentioned something about ETFs. Yeah, I should go have a look. And he mentioned this one, I think it was called IVV and da-da-da. So you might jot down a few things and, all right, now you're sitting at your computer and you've got your broker on the phone, or you've got your investing platform, ComSec or whatever it might be. Now what? When are you going to buy them? All right, and when are you going to sell them? Well, what stop loss are you going to apply? Are you going to have a stop loss? You're just going to buy and hold and hope, right? We answer all this. We give you an exact trading system by the end of the course, exact trading system that you can log into and check each and every day. And call our support team, call me, email us, and we can work you through it. All right. And then we get your global superstar ETFs portfolio started. Now, again, I'm not giving you personal advice. I can't tell you whether this is or isn't suitable for you. I don't know. Only you and your personal advisor can work that out. But what I can do is to show you how to put something together depending on what you're noting, what you're looking to invest. The rest is up to you. I can't tell you whether that is suitable for you or not. Okay, so the ASX Global Superstar ETF filter. So this is the way we screen: ensure sufficient liquidity, no penny ETFs, draw upon a refined ETF watch list. The watch list has and will keep undergoing rigorous checks and balances. So that's part of the ongoing service that we offer there. And then, when do you buy and when do you sell? So where are the signals where you get in, where are the signals where you get out? We cover that in the course. And then we'll show you you can tailor the ETF plan. So, for example, let's say you are, in definition, in theory, should I say, I've got to word this carefully, just theoretically, let's say you said, look, I've got roughly about $20,100 I'm looking potentially to put into ETFs. Is it suitable for you? I can't answer that. But using the VectorVest system, this is how I would do it, and we would show you how to do it. So, here I took a tailored approach, and the back test ended up with $20,100. And right now, and I've hidden it for good reason, because when you come to the course, I can then show you exactly how it's all done. I didn't want to sort of give all the trade secrets away, but that trading system would involve 137 of a certain ETF, 94 of another, 30 of another, 29 of another, and 27 of another one. And collectively, between these 5 ETFs, you'd have exposure to over 800 plus stocks on average in this example. All right, and so I've got all my stop loss criteria set in, and that's what it would entail. Now, if I like the look of what has been, and I want to jump on and continue on that ride with my $20,100, then I just would follow this exactly as is. I'd just go and acquire those ETFs per those quantities, and I'd log into VectorVest each and every day. And if those quantities changed, you get the alert popping up. And if they're changed, if it said it's selling out that ETF, then you can consider, if you choose to sell out, and the new one that it notes it's going to buy in, should you choose, you can go and buy it. I can't tell you what you shouldn't do, but I can certainly show you what's being done, and then the rest is up to you. If you chose to follow it, then you could be empowered. All right, so anyway, hope that is of interest there. So the all-important link. Now, the all-important link, and thank you. There's a question's come in from John. I'll answer that shortly. Let me copy and paste that. Can I copy and paste that into the chat box? I'll put it in there. I'll show you the screen, how to go there now. Now, before I go too much further, I'm going to talk about the cost, because you're going to be impressed. I have mentioned it at Q&As Hopefully that's correct. I've sent that to everybody. I mentioned at the Q&A sessions for those that have come along, our subscribers, if you're new to VectorVest, here we are. $49 US. So called what's that exchange rate? About 65, 70 Aussie dollars. You will get over 2.5 hours of recording. You'll get a trading system that has been vigorously tested. I've been working with VectorVest for over 13 years. This is probably some of the best stuff I've ever seen in Australia, I must admit, and so much so that I do my self-managed super fund with it. You'll get access to that system. Now, ask yourself this question. If you were to invest, let's say, $10,000 into ETFs, and you were to make half of what those ETFs on average have been doing over the years, you can see that would get paid back very, very quickly. Now, and again, caveat emptor, disclaimer, there is no guarantee for anything in life. Just because something's been working well over the last 10, 12, 15 plus years doesn't mean it'll keep working going forward. But then you can use that argument for anything in life and say, well, then I'm not going to try anything ever because there's no guarantees. But what we do know is that the harder we work with our back testing, and the more work we put in, the more we roll up our sleeves and get our hands dirty and get in there and turn all the stones in terms of available investment strategies, the better our returns become. I'm very confident that this trading system is going to hold up. Time will tell, but I'm very confident. It looks pretty robust to me with all the testing we've done. And just so it gives you peace of mind, I've put my money where my mouth is. I'm doing this right now as we speak. Okay, so I hope that gives you some confidence. I'm not just talking the talk, I'll walk it as well. I'm doing it. It's $49, and then you can click here and go ahead and purchase it. So you can see a description. What description did I write again? Whether you are a retiree investor managing a self-managed super fund or an investor wanting to get international exposure in an efficient and simple manner, then this is the course for you. And exceptional returns from the best performing global ETF investments listed on the ASX, ETFs that give you exposure to the likes of the S&P 500, the Nasdaq 100, WisdomTree, Japan Hedged Equity Index, the Morningstar Developed Markets Technology Moat Focus Index, to name a few. All these heavily globally focused ETFs are listed on the ASX, so you can use your existing broker to place your trades in Australian time. Of course, we'll show you exactly how to build the ASX Global Superstar ETF trading system, a system that has been vigorously tested and perfected. The trading plan will tell you exactly what to buy, and when to sell. The trading system is very easy to follow and for you to implement should you choose. The course empowers you to become an ASX Global Superstar ETFs investor. All right, so I hope you like the little write-up there. And anyway, so there's the agenda again. So if you wanted to remember the agenda, it's all there as well per that link. All right, so if I just bring that slide back up again, www.vectorvest.com.au/superstar, and then that's where it goes to on the link. All right, so what I'll do now is I'll open up to Q&A, and I'll do my very best to answer all your questions. And so I had a first question coming in from John noting, is Module 2 adaptable straight across the US market, i.e. trading on the US exchange, which I do now? Question mark. John, I haven't tested it on the US market, but the exact same methodology could be applied. And we'll teach you the methodology in the course and how we've done it for Australia. I can't see why it wouldn't work in the US. The key would be to refine a watch list of top performing US ETFs for the US market. And I'm certain a lot of those parameters that we apply in Australia would work. The fact is that I got such good returns with such minimal amount of work on the ASX didn't warrant me needing to go to the US market. So I suppose I put all the emphasis on the ASX because the typical question has been put to me, Russell, can I get this international exposure via the ASX? I don't want to go and trade the US market. I don't feel comfortable for whatever reason. Now, I know a lot of you do now trade the US, so all the more power to you. But this course has been done primarily with the focus on the ASX. Okay, but certainly, I mean, if we're getting those returns on the ASX with those type of ETFs, I'd imagine the US would even be better because their ETF market is that much more ahead of ours. We're probably about 7-8 years behind where the US is now. All right, so the US really took off about 12, 13 years ago. It really took off. The ETFs started racing away. And then we sort of slowly, the ETF providers started to offer it in Australia. And it's only been in recent years that we're kicking off. We've got a lot to catch up with the US. So, but why not jump onto the ASX offerings that are still new? And as they become more and more popular, anyway. Let's see. Carla notes, Russell, are there any add-ons required? Yes, very good question. So the add-on required will require the auto timer. Now, if you're new to VectorVest, don't worry about these terms using here. You'll get access to all that. You can get access to it at no additional cost. That's if you want to follow the trading system that we've put together for the ETFs. If you don't, then you don't need that additional add-on. It's a one-time charge. It's not going to break the bank type thing, but it's only for those that want to follow exactly the trading systems that they put together. All right. So auto timer. That's the only one that's required. Auto timer. That's the back tester. All right. Yeah, so for the trailing stop, if you want to, Gal's asking in regards to the trailing stop, or auto time is all you need for that trailing stop. There's no pro trader or anything like that. David asks, have you compared results of 5 pots of 100 grand versus one pot of 500,000 going into your scaling examples? No, David, I haven't. It would be a very interesting experiment. But, I was pretty happy on average that around about that 20% return mark. Values going well over $500,000. It seemed to consistently be holding around about that 20%. So I've been very happy with it. Let's see. Jadev notes IVV has given CAGR of 16.75 for the last 10 years. How come the ASX Global Super ETF is not? Because we're not going to put all of our money into IVV, for example. Remember, I want diversification. If I'm going to buy IVV outright, the S&P 500, I'm putting all my eggs into the S&P 500. So if you want to do that, great. Then you could ride it out. But what happens if and when the day comes where it falls away? The notion behind the whole course here was diversification. Remember, it was one of my key requirements. I needed diversification. Okay, but look, if you want to take on higher risk and put all your emphasis on one or two ETFs, so you're just concentrating on the S&P 500 or the ASX 200 or whatever it might be, and it works out, then you get rewarded more so. You've taken on more risk. But there'll come the time where where it's like, ooh, hang on, maybe that wasn't such a smart strategy. So, again, up to you. And when we teach this in the course, you can modify it such that you can just, all right, well, I'm just doing S&P 500 trackers. Okay. Well, you can test it and we can set it up and formulate it for that exact requirement if that's what you're after. What was interesting on this trading system here is I had one particular stock, and I'll share it at the course, that I had in. And I had it in the refined watch list. It was actually a typo. And when we were doing the back testing, we were getting phenomenal back test results, like outrageous returns, like 70, 80% annualized a year. And we looked at it and went, my goodness, this is too good to be true. And we dug in a bit deeper and then realized, we'd had a typo. One of the ETFs that we were supposed to have in was put in incorrectly. But if we threw this particular stock in, it produced these amazing results. So at the course, I'll show you, if you want to mix it up with some stocks in combination with the ETFs, we can show you how to do that. So a few of you might be saying, well, I want my ETFs and stocks. All right, what if we were to show you how to do it? We can do that at the course as well. Let's see, Peter notes, why do you allow for drawdown of 23 to 25? Seems to be a very wide stop. Returns versus workload, Peter. It came down to workload versus returns. I can get better returns in some cases with tighter stops, but the workload goes through the roof. Instead of doing 2 or 3 trades a year, you're doing 12, 13, 14, up to 30 plus trades a year. And I thought about it. That's the balancing act I always have in designing trading systems, and that is, what is the end audience after? There's no point coming along to the presentation here and saying, hey, here's this great system. It's done 35% returns on average since 2012. You go, great, tell me more about it. And say, well, it's going to involve 30 trades a year. most of you are going to log off and go, yeah, thanks, no thanks, we're out of here. All right, so it comes down to the balance. And in the course, you can modify the system, so you can tweak it. Now, just because you've got a tighter stop loss, it doesn't always mean you're going to get better returns. I've seen that happen many times. So in Australia, for example, typically the ASX 200 type stocks, they tend to perform, for whatever reason, a bit easier, a bit better with a slightly wider ranging stop loss. As soon as you tighten it up too much, you end up doing a whole lot of extra trades and the returns start evaporating. The flip side, the payoff, I guess, on the other side of the equation is that you do experience a bit more volatility. So, what is it that you're after? If after low volatility, then, you do a bit more trades and your returns might be impacted both positively or negatively. We don't know until we tested it. So sometimes it works out well. You get the better returns and the low volatility and with not too much extra workload. Other times on the strategy we've tested, it's like the workload's increased, the returns have decreased, and it's not a pleasant portfolio. With ETFs, what we've done here is we believe that we've optimized it for the majority of those that'll be interested in the course. All right, but we can certainly do some stress testing at the mastery sessions. Let's see here. Rob notes, how much is the order timer so I can jump on board? I believe I wouldn't pay it until you've tested it out to make sure it's exactly what you want. So on the VectorVest website, I believe it is $395 USD one-time charge. It's never an additional charge thereafter. So what's that in Australian dollars? About 500 and something dollars. Let's just double check here. If I go to VectorVest, let's just double check. So I've gone to vectorvest.com.au and I go to products. This is the auto timer. You can take out a free trial. So if you do the course, take out a free trial, and you can do the course in 30 days and get the free trial, so it's not going to cost you anything. At the end of the course, if you then decide, yep, I like the auto timer, I like the course, I like the methodology, this is my cup of tea, then at that point you can consider buying it. That's probably the way I do it. Now, I will check with the team because I believe if you come along to the course, we can drop $100 off that. I'll double check. There is a special price of $395. And so for those of you that take out the course, I will look to get the special price of $395. But what you can do in the interim is just trial out for 30 days. So as part of your course purchase, you can then trial out. I had this web page open here as well. You can also check us out on YouTube. If you go to YouTube, type in VectorVest Australia, and you can see some videos on the auto timer being used. All right, so I hope that helps. Let's see. Whoop, where's my camera gone? Let's put me back on. All right, so next question coming in. IOO has given 15.6 CAGR, notes JDev. Yeah, look, and it has. It's been a high performer. So why not include it into your ETFs type strategy? Or does it stack up? Is there one better? What have the drawdowns been like? When do you buy and sell it? You just hold it indefinitely. All right, so all these things are covered in the back testing. Robin notes, I've signed up for the course. Great, Robin. Great to have you along. Thank you. Let's see. Martin notes, I notice ComSec cancel trading stop losses on ETFs when distributions are announced. Was this taken into account in back testing? Maybe other brokers don't have this. No, I wasn't aware of that, Martin. No, I didn't take that into account. But look, here's the thing. When you've got your trading plan set up, it'll tell you, right? This is when it's buying, whatever ETF. This is when it's selling a given ETF. It'll operate irrespective of what ComSec does or doesn't do. So at that point, you can go, oh, okay, IVV is being sold out. And you go, oh, this should be triggered by my ComSec today. And oh, hang on, it hasn't. Oh, why is that? Oh, okay, I'll sell it anyway. So what I mean is that you've got the override system with the VectorVest. All right, so Robin then asked, how do I access it? So once you've clicked on the link, so if I then go to the link and let me just click on that I've given to you guys on the link there. All right, it should then all flow through. All right, so you go to the link and then you purchase it. All right, so you then click purchase course, then it'll flow through and then away you go. You put it all in, There's your special price of 49. Now, I believe you'll get an email telling you exactly how to access the course, but if you get stuck, fear not, because I will show you how to access it. So, I mean, just so you can see as well on here, like, I mean, hopefully I'm not giving away too much here, but I suppose I want to give you an appreciation for the work that was done. I mean, here are all, it's just oodles of back tests. Like I said, this took 6 months to put together. I didn't just, wake up one day and go, oh, this will do. It had to work. I mean, here's my self-managed super fund with Host Plus, for example. Here is the trading. I've got to finish off, but that's the actual trading system that applies this very ETF strategy. I was just doing some derivations to it, but you can see it's been annualizing 16% for me since 2018. But anyway, I digress. So what I wanted to show you here was, if I go to training, and then I go to VectorVest University. So, once you've got access to VectorVest, you go to training, you go to the VectorVest University. This is another way you can find it. And then it will be listed in the VectorVest University, this course. So let's see here. I'm just seeing if I just Control F and look for a search. Here we are. ASX Global Super ETFs. And then you just click on it. Whoop, the voice is going. Just drink some water. And I haven't purchased it yet, but that's the other way you can access it. So to our existing subscribers, if you go to the VectorVest University, you can access it that way. But Robin, once you've purchased the course, then just go to VectorVest University, and it won't say purchase course because you would have purchased it. You'll get straight into it. It'll offer you access to the course straight away. Where was it now? ETF. Yeah, it's okay. It's under the recommended content. Okay, and so then it would then not say purchase, it would say access now, and you click on it. If you get stuck, call support, our toll-free 1-800-303-782, and support will help you get access to that. All right, so I'll just jump back to the link for you if you're asking for the link again. I've put it into the chat box as well. Okay, so it's all in the chat box. Sorry, just drinking some water there. The voice was sort of going. All right, let's see. Rob notes, thanks for audit timer cost at $395. And what are other costs involved, please? Apart from the course, Rob, so you'll take it a trial to VectorVest. I think it's $10 as part of your trial. And that's it. And then you can access the course. You'll get access to the course for 12 months. So you've got a year's worth of access to the course. And then if you want the VectorVest system, all right, if you want the VectorVest system, it's $59 a month, or one-time charge is $645. That's to get access to the software. All right, but get through the course, see what you think first. Take it a trial for $10, and purchase the course. So if you think about it, $9.95 for the trial. Is a trial included as part of the course? But let's say it's not. So $9.95 for the trial, plus $49 for the course. So call it $59 US. So call it $100 Australian dollars. For $100 Australian dollars, you've got 5 weeks access to the course. You can watch the entire course. You can get access to the VectorVest software, and you can, fully debrief and see exactly what you think of it. At the end of that, if you then still like it, which I'm very confident you will, and positive that you will, then at that point you can then decide if you want to continue it further. All right. We could sell this course for a lot more. I know we could. Of course we could. There's not many ETF course providers out there that'll do it for the cost that I'm doing for. The objective was not to try take as much money as possible from making a course. No. The objective was to show you a system I'm really proud of that I have put together. Really excited to share it. If I can do well out of it, I can't see why you can't. To let you guys benefit, because it's a win-win. If you're benefiting, you remain on as a subscriber. You like VectorVest, you tell your friends and family because you're making money, you're doing well. That was the objective, really. The reason why we put a small value on the course, human psychology. If I say something's free, it's free. I can get it next week, next year, the month after. You don't value it, right? You put a little bit of a value on it, all of a sudden people want it. It's just how it works. At least you get those that are serious about it turning up. Let's see. Rob notes, sorry, Russ, I'm a current subscriber. Love you guys. I have made thousands. There you go. Boom. And no, I didn't pay Rob to say that. That came from the heart. That's a genuine comment that's come through there. So Oh, thanks, Rob. You know, I speak on behalf of myself. I have too. You know, my new awesome kitchen and lounge renovation. Thank you, VectorVest. Never thought in my wildest dreams 12 years ago when I first started VectorVest that I'd be able to afford to do things like that. So it's real. I'm the real deal. Rob, real deal. Lots of other people. You can do it, but it's you know, prior to VectorVest, I lost $50,000 at the age of 28. I was a disaster. I had a master's degree in finance. I was useless. Didn't mean I was going to make money in the market. I'm good at crunching numbers in Excel spreadsheet, whack calculations and discounted cash flows and all that type of stuff. Didn't mean I knew how to invest. They don't teach you how to invest at university. I mean, you get some courses that give you a bit of a taste into it, but nothing beats real world. So I had to go out. I had to lose a lot of money. I had to suffer to realize what I didn't know until I could find a better way. And I found VectorVest. My father found VectorVest out of pure frustration with what had happened to him during the global financial crisis. He then passed it on to me. I took a look at it, and the rest is history. Here we are to this day. So, you know, out of the fires of adversity come amazing opportunity. So, you know, do you want to seize the opportunity? Here's the ETF opportunity for you. I've set it at a reasonable price such that it's not going to break the bank. I know things are tough at the moment out there financially in the global markets, and that's why we also want to set a reasonable price for you. If you want to do it yourself, if you want to take full control, then this is the system for you. If not, then, you know, fund managers and the likes will be those that you're probably going to enjoy more. Okay, so it's really for those that want to take their investing to the next level themselves. And that's what VectorVest is all about. We give you the tools, when to buy, what to buy, when to sell. We show you trading systems like the ETF trading system, and then the rest is up to you if you choose to do it. All right. So I know a lot of you manage your own self-managed super funds, you know, so you set up your self-managed super fund. Now what? All right. So you've set it all up. Now what? This is where we come in. When to buy, what to buy, when to sell for those that do it themselves. All right. And we want it easy. I want an easy system to follow. If my self-managed super fund involved 20, 30 trades a month, there's no way I'd be self-managing my own money. I'd give it to someone else. No, you do it. There's no way I've got time to do that. All right. So, and, you know, the returns have got to stack up. Just because I'm doing a low workload or whatever have you, if the returns don't stack up, then of course I'd give it to someone else. So the returns have got to stack up. It's got to be easy to do. It's got to be fun. Otherwise, what's the point? All right. So, anyway, hope that helps. And thank you, everybody, for coming along. I hope you enjoyed it. Yeah, it's... I'll give you a bit of a peek in the back testing. I did one where I took it, and I think I tested one that was like over $1 million, and it's still held up. Couldn't believe the liquidity. So here's one from 2019. This one started with 350,000, and it's grown itself to 736. 85% winners, 20% annualized return. Let's get myself out the way here. 20% annualized. Compounding at 14, drawdown at 23. Take out the COVID sell down, and that literally halves. Anyway, so there it all is. All right, so I hope you got a lot out of this short webcast. I'll just double check. Are there any more questions there? And Rob goes here, and yeah, thanks for your kind words there, Rob. All right, I'll wrap it up. Again, let's just jump back to that link. There's the link. Now, look, if for whatever reason you just didn't want to ask a question, actually, I've got one or two more slides here. So that's right. Just jog my memory here. I shouldn't have ended it too soon. We're going to have 2 mastery sessions on this course. So we're not just going to give you the course and then go, oh, well, good luck. No, we'll call you back, and you don't have to come back to these. You can watch the recordings. It's all been recorded, so you can get the replays. 24th of July and 31st of July, both at 11 o'clock Sydney time equivalent. We will go through the course with you, the mastery sessions. We will master the content. 24th of July will be module 1. 31st of July will be for module 2. Okay, so, and if you sign up to VectorVest as well, don't forget, and also to our existing subscribers, we've got the Q&A, the weekly Q&As, 19, 26 July, 2 August. So you can always come to those and ask questions. This is the side I wanted. So if you didn't want to ask a question today for whatever reason, maybe it's just too difficult to type out a long question, email me or call support, and they can pass on my number to call me as well, should you choose. There's my email address, and there's the link to the course as well. All right, so if you prefer to speak to support, we're open, I think, for another hour yet, and then we'll open up again tonight and stay open all the way through the night until 2 o'clock tomorrow afternoon. We cover both Northern and Southern Hemisphere customers, so that's why we do it that way. The team is based in the US, the support team, consultants, and you can chat to our team that work at our office there. All right. Otherwise, email me and ask me to call you. Drop us your number, then we can arrange a time to chat if it's easier. All right. So I hope that helps. Let's just see. Have I answered all the questions? I see. Another one coming through here. Carlo notes, great presentation. Thank you, Russell. I'm on board. Awesome. Thanks, Carlo. You won't regret it. Like I said, this is, I've worked at VectorVest 13 years. I've looked, those of you that know me, I mean, I wear contacts these days, but, I have glasses from all the hours I've stared at computer screens over my life. And, of all the back testing, stress testing I've done, I'm like, whew, thank goodness for ETFs, because this makes the returns much easier to achieve. I can do it with share portfolios. I can do a great job, but it does involve a little bit more work. And I know the average retiree investor out there has said to me, I just don't want to do that trading system. It's too much work. I just don't want to do 4 or 5 trades a week or a month. I'm traveling Australia. I want to see my grandchildren. Like, you got something easier? Because if you haven't, I'll go to fund manager. And you think, you're going to experience some frustration there too, because you're not going to get your reports like you do each and every day. You can see exactly what's happening with VectorVest in a funds under management. Not all the positions are disclosed all the time. And I know that you like to see all your positions. So you've got this sort of issue that's occurring where a subscriber wants to see exactly what's going on, but doesn't really want to do the work, which is fair enough, understandable in retirement. We want to do other things with our life. What if I could find a way where the workload was 100% manageable, super easy, the returns are still half decent, and you can see exactly what's taking place each and every day. Now, in that trading system, you will see exactly what ETF is held each and every day. So there's no, black box. Oh, well, I don't really know. Do this. The last thing I'll leave you with, call your fund manager today, any fund manager you're with, your super fund, whoever might be, and say, hey, can I please speak to the, whoever it is, the fund manager or the liaison person you can talk to, and say, can you please tell me today, sir or ma'am, whoever it is, can you tell me exactly what you're holding in my whatever fund, my balanced mixed fund or whatever it might be called, international mixed fund or whatever. You're not going to get that. They're not going to tell you that. And when you ask them why, they go, well, because if we disclose it all to you, then competitors could get that information and it would disadvantage you. And you're going, but hang on, it's my money. I want to know where it's going. So if you want to know exactly what's held at all points in time, then this is the course for you, because it lifts the lid and you will see exactly what's being held. And that's what drew me to VectorVest. I wanted to see exactly what was taking place every day. I didn't want to have to wait for quarterly reports to find out what had been, and now I didn't know what is, if you know what I mean. So anyway, I digress. Okay, well, thanks again. Let's see. And Rob notes, well done, very well done. No fund manager will tell you where your money is. Yeah, I mean, look, some people are comfortable there. They're happy with it. Yeah, okay, well, I trust them. I'm happy with it. Let me note something to you which happened to me. I was in that boat in my 20s. And then the global financial crisis hit. And then I was working in Hong Kong at the time for a big financial institution. And then I wanted my money out. I was like, no, I've got to get out. I've got to get out. They froze my funds for 6 months or 4 months or whatever it was. I couldn't redeem my units. And I said, it's my money. Give me my money. No, it's frozen. And it didn't matter how much I jumped up and down or how frustrated I got, the funds were frozen. And that to me was, that is it, I'm done. I'm managing my own money. And the same thing happened to my poor dad. And that's how we came to find VectorVest. So, yeah, thank goodness for the funds being frozen, because it took us to a much better place. But at the time, the world was over. The sky had fallen. We'd lost a small fortune. So anyway, thanks again. Have a great afternoon, everybody. And I look forward to seeing you at the course, those that are coming along. All right, have a great afternoon, and I will wrap it up now. I've just got to find where I turn off the recording button. All right, I'll leave it there. Thanks, folks. Bye now.